What's going on, everybody? Let me know if you can hear me, and apologize for a little bit of the noise. We got the people outside doing what they do. But what we're going to talk about today is how we're looking at this early market, and also something that we call market correlation, right? Now, here's why this video can be really, really, let's say, beneficial to you, is because what we're going to talk about is how one particular company has not done well in the market, and how the market is going to try to front run those earning expectations and other companies that somewhat serve that same market. And the reason why you want to pay attention to this, because this is really, really important, because as a trader, if you're trading companies that are in a similar sector, or definitely in a similar industry, but most importantly, if you're trading companies that are kind of like in a similar sector, what you want to be worried about is how their earnings can positively or negatively impact what you're looking at, right? And so what you don't want to do is look at things in isolation. And I think this is really, really important, because if we haven't been taught or trained how to see things from that particular perspective and see it with our own eyes, it can be very detrimental to our ability to not only invest, but also to trade, right? So that's what I want people to understand. So that's what we're going to talk about this morning. We're not going to be here long, because I got things I got to do in a little minute. But I want to kind of get you to see, as somebody that actually trades the market, what are some of the things I'm looking for? What are some of the opportunities that I'm looking for, right? Early in the morning. And it's not about morning routines and things of that nature. That's entertainment. I'm trying to get you to understand, expose you to a retail trader that actually can pull money out of the market. And not only pull money out of the market, teaching people how to trade, but can pull money out of the market by actually trading. And I'm not being disrespectful to anybody that does any of these situations, right? Some people are here to, they got really, really big platforms. They do what they do. But I'm trying to get you to kind of understand how I look at the market, and not for you to do it the way I do it, but maybe you could take some of what I'm doing and incorporate it into what you're doing, right? That's the goal. So really quickly, the show's still being sponsored by www.thehighestpaid.online. Still having that sale on all our options trading courses. That's going to be lasting until November 30th. NOV 40 will get you 40% off all the courses. I encourage you to move forward with that, because the way you really get good at this market is through consistency and not trying to be there in 60 days. And that's where maybe many people struggle, is they come in with a lot of enthusiasm, and then if it don't pop for them in a short amount of time, they find something else to do. And if they really look back at their life, they've been doing that their whole life. Things may not pop in 30, 60, 90 days. The question is, how can we get better every day consistently until we get to where we want to go? Right? But if I'm trying to get to where I'm trying to go in 30 days and it don't pop, so what you see in a lot of situations, people come in with a lot of enthusiasm, and then when it's not turning the way they wanted to turn, they lose all the enthusiasm and they pull back from the situation. So what I want to encourage people to do is, when they come into this space, you can come in excited, you can come in optimistic about the future, but come in with the intent to stand the test of time, because you're going to have good days, bad days, you're going to have great days, you're going to have terrible days. But the goal is, can you stick with it all the way through the situation? So it's really important that we frame expectations in that particular capacity, right? So if you can hear me, let me know that you can hear me. Let me know what part of the country that you're coming out of. And then we're going to go ahead and kind of get into it, right? So Corporate Checks TV, what's going on? Miss Lovely Ava, appreciate you for coming through. So what's up with everybody? I know a lot of people at work, so they may not be able to sign off, but we're going to go ahead and get into it, right? I woke up this morning looking to go into a trade on a particular ticker. I didn't think the market was going to be red, because I didn't think Target was going to report this bad. I'm sorry. Yeah, I didn't think Target was going to report bad. I really thought they were going to report better. It's a great opportunity for me, because I can buy calls at a discount, because the overall market is selling off. What I'm thinking now is that there's anxiety around how well they think Nvidia is going to report. And so as a result, what they did is they're running a program to just sell off the market, right? So, because they're worried about Nvidia not reporting and really not guiding out well, because that'd be a confirmation that this whole AI thing might be a bubble, right? So there's a lot of anxiety in the market behind that. I don't see any possibility that Nvidia doesn't report well and doesn't guide well. I just don't see the possibility, but I could be missing it. Somebody may know something I don't know. But I think that's a lot of anxiety in the market, is that if Nvidia doesn't not only report well, but if they don't guide well going out into the next year, then we're going to get a lot of headlines that, well, this is a bubble, yada, 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 right? And so that's what I believe is going on, because Nvidia reports today or either tomorrow, but I believe it's today. So Mr. Bass says, do I think the market's scared about AI and the war? I don't think they're scared. I think there's anxiety that Nvidia doesn't report that their future sales are going to be where people think they are, right? I think the war with Russia is already priced in at the moment. I think it's been going on for 2-3 years, right? So I think it's relatively priced in, unless something else dramatic happens over there. That's been consistent in the market since 2022, that war with Russia. So I think that's priced in, right? In my opinion, right? I think people being worried that Nvidia won't guide out future earnings to where they think they should be, because Nvidia's in a growth stage. So when we're looking at a company that's in the growth stage, the worst thing that can happen is that it doesn't forecast more growth, which means what? Everybody that bought pretty much over the last 6 months to a year overpaid for their stock, right? So I did a webinar now, I don't know, maybe 90 days ago about, how I've been so successful at running puts. And a lot of it is just understanding like growth stages and how companies will punish you if you don't continue to grow, right? So I think people are anxious about Nvidia, so they run in a program. And when I say a program, is that they just tell the algos to sell the market off at a certain level because they want to take a certain amount of risk off the table. So looking at the SPY, that 586 was our support level. So we go out on the 5-day. That 586 was a support. We're under that particular support level. So we sold off. This was a good sale from this morning. If somebody had puts, looking at it on the yearly, right? We're still seeing that 586 support level. We just want to see where we close at, right? And so if Nvidia believe they do report this afternoon, how do they report? But most importantly, how do they guide? But we're pretty much right at that support level. So we sold down from the all-time high. We consolidated. Here's where we're at right now today. Let's just see where we close. Here's the 5-day on the 5-minute ticker. Let's just see where we close at today, right? We're at 585. So a good put for somebody if they started shorting at the open, right? They did their thing. So big up to them, whoever shorted at the open. I'm not really playing this. I'm looking to enter in the calls on another ticker. So I'm cool with today being red, because it means I should be able to buy cheaper calls than what I'm glad I didn't buy yesterday. I didn't force my way into the market. I would have overpaid for them. So let's see, can the selling pressure stay up, right? But I just think there's a program, because there's a little bit of anxiety in the market, just because we don't know how Nvidia is going to not only report, but how they're going to guide. So here's what we're going to talk about really quickly, right? So we'll call this market correlation, good or bad. Okay. The reason why I want to talk about this is because when I'm trading a ticker, I'm never looking at that ticker in isolation, right? One of the ways in which people overprice companies is because they don't really understand how the company's been priced. You see a lot of that with Tesla. That's going to work until it doesn't work, right? So it's worked for the past, let's say 4 or 5 years. 4 or 5 years is not a long track record in the life of a publicly traded company. Okay. When I'm talking to somebody and we're pricing something and they don't take into consideration the other companies in that space, I really question their ability to understand valuation. Because what you can't do is you can't pull a company's valuation and make it isolated to every other company in that same space, right? But a lot of people do this, and it passes. It creates good entertainment, yada, yada, yada. But the reason why a lot of people are going to really lose their butt trying to pick stocks is because they don't understand is that you can't evaluate something in isolation to the other companies that do the same thing that it does, right? So when I'm trading something, what I'm looking for is if a company comes out and they report and they do really well or really bad, how does that impact the other companies in that same space? Does it mean that the whole space is on the upswing? Does it mean that the whole space is on the downswing? Or does it mean that that particular company is sucking all the air out of the room and not allowing those other companies to survive, right? And I talked about this before on other videos. They're on the playlist, right? When I'm looking at investing in a company, I want to look for the number one and number two players in the space, right? So how much market share do the first and second players in the space, how much market share do they take up? Then what is everybody else taking up, right? Because it's a reason why those first two are number one and two, and it's a reason why those other ones are where they're at. Why would I take capital and invest in the other ones and not invest in the first two players in the space unless I believe that the other ones in the space, there's some price appreciation that can take place? But often what happens, and we see this a lot in the markets, is to where people miss or don't have the ability to get into the first and second players in the space. And what they get sold on is that I'm going to invest in the stragglers, but they're stragglers for a reason, right? But they're cheap, right? But people get caught into the cheapness of the straggler, but they're a straggler for a reason. So they don't have the ability for whatever reason to lead the space, right? But people will go into those companies because they're cheap. So we saw this in the EV space. Once Tesla showed that there's an actual market for EVs, we started seeing a lot of startup EVs come out, and they were cheaper than Tesla, so everybody put money into those. Many of those are still not around anymore. Because why? They never had an ability to do what they said they could do in the first place. They was just riding the wave. But because Tesla was so expensive, and I don't even understand how to evaluate Toyota, Ford, I don't understand how to evaluate, I don't know, another ticket, maybe Honda, I'm not sure. Because I don't really know how to evaluate it. Let me go pick one of these upstart EV companies, put my money into those. But without understanding is that, well, they're never even going to be like the fourth or fifth EV company, because you got Tesla leading, then you got a lot of the original car manufacturers. They're also in the space. Then you have these upstarts, which probably shouldn't be publicly owned companies anyway, but the easiest way for them to exit and make a lot of money was to go public. Really, they should be like Ferrari and just sell privately. So like Lucid. Lucid is never going to dominate the space. It just won't happen. But I can buy Lucid cheaper than Tesla, and I like the growth story better than maybe a Ford or a Toyota. But many people that bought Lucid, they're dead money. So these are things that you kind of want to understand. So we're going to go into market correlation, right? Just trying to frame it properly. Look at Target. So Target reported today, 20% drop at the open. Cut forecast, biggest earnings miss in 2 years, right? Okay, so what do we know? Missed third quarter earnings, revenue estimates cut full year guidance. Guidance now was flat on the year, I believe. Struggle to drive sales even after reducing price on thousands of items. The results come a day after Walmart beat expectations and hyped this outlook. That's really, really important, right? So let's keep going down. So we got earnings per share, EPS 1.85 versus 2.30 expected. Revenue 25.67 versus 25.90. So a small miss on revenue, but that's a problem when you cut your prices. So after you cut your prices and you still miss on revenue, that's an issue, right? Third quarter income tumbled. Third quarter net income, was a miss by 12%, right? $854 million. From 971. Revenue rose, but it didn't meet expectations. Now, what do we know? Net income. So let me give it a framework. We cut prices and our net income still fell by 12%. That's a problem. Because what we're saying is that even though we cut our prices, it still was a hit to our profitability. Right? So that's an issue. Now, here's what I want you to understand, and we kind of talked about this, let's say maybe last earnings or maybe the earnings before. So maybe last 90 days or maybe the 90 days before that. I don't remember. What we believe is that Target's customers are going to Walmart because of the economic conditions that we're currently in. As a result, Target is discounting to try to keep those customers, and it's still not working. Right? So what Target did is they got it flat for revenue on the year for next year, right? I think that's a sandbag, and what I mean is a sandbag is I think they can do better than that, but maybe they can't. Now, here's what I want you to understand. In that particular space where we're looking for a shopper who, we talked about this yesterday on my dating thing. A lot of Americans, there's a large amount of our American population, they make 50, 60 a year. That's just a fact. You know, people can write all these long soliloquies on the internet and they can do all this. The data is the data. All you gotta do is look at census data. The data is the data. Then underneath that, we have a large amount of Americans that we call working poor, where they work every day, and they may be lucky to make $30,000, $35,000 a year, right? These are also facts. So when we get past all the internet conversations and people writing war and peace and people's comments about dating and how much money somebody should have, we can always go back to the income data and look at the income data to understand the state of the situation. So this is why, as a trader, I want to always encourage you to not get caught up in people lying on the internet about all kind of stuff and just saying what they want to say, because what we're looking at is an issue with a consumer, right? And where they're choosing to spend their money, really based on how much money that they have. It's not that Walmart just has a better business at Target. They sure heck don't have better customer service. I wouldn't say that they got better internal operations. What I mean in operations is like their merchandising is better, their layout is better. None of that is better, right? But what we're seeing is that the customer that Target historically would be getting is not going to Walmart, right? That's really, really important for people to kind of understand it, because what we've done is created a world where everybody got a voice, and there's nothing wrong with that. That's why I got a voice right now, because of that same, I don't know what that particular term is, democratization of media, where everybody got a voice. The problem is many of these voices is just talking. And if people buy into what these people are saying, and we got a young lady that just fell victim to that not too long ago, even though there's a lot more going on over there than what she's telling us, and they act on that, it's not going to work for them because there's no real foundation to that, really based on how the real world really works, right? Because what we're seeing is that in a retailer that really specializes in going after a person that's looking for a discount, they're doing more business. Their business is picking up. And there's a reason for that, right? Because anybody that's been inside Walmart knows their customer service is terrible. They got stores that are literally big as an aircraft hangar. You got to walk the whole store. Like, you got to really have your energy before you go into Walmart. You got to be well rested, because you got to walk that whole store. And they still doing numbers. Now, here's what I want you to understand, right? Because you're talking about market correlation. There's other stores in that same space, right? And I did a video on this. It's on the YouTube. There's other stores in that same space, made really good trades, not this year, but I want to say last year, playing this same type of understanding of the market, right? So what we also want to look at today is that Dollar General's down, Dollar Tree's down, and Five Below is down. Now, they don't report until later. So like Dollar General reports on the 5th. Dollar Tree reports on the 4th. So they report the same week. And Five reports on the 4th. So they all report the same week. What we also believe, and I talked about this earlier this year, is that Walmart is also taking their customer. So yeah, because we're running a program and the market sold off today, because I think there's a lot of anxiety around Nvidia, I think these companies are down, right? And if you look at their, look at their 5-year, they're down a lot. This company at one time was trading at 250. Dollar Tree at one time was trading at 175. It's sold off very, very much extreme. And then the same thing with this company. So they've never recovered from like Five was doing good with from an expansion standpoint. And then in 2024, they sold down extremely aggressively, right? So what we're saying is that many of these companies are not what we would call cheap, but they're cheap for a reason. I believe that they're cheap, especially with Dollar General and Dollar Tree, is because they're also losing their business to Walmart. I believe Walmart is taking everybody's business in this particular space. they can't compete with them, right? Because one thing about Walmart is when you go in there, especially the super Walmarts, you have everything you need. You don't have to buy your hard lines at one place and then go buy your groceries at another place. And in Walmart, because they have economies of scale, they have really robust and really thorough distribution. And they also have really good supplier relationships. They can get stuff cheaper. They have better relations. They have better distribution. And they're all in one situation. And I really believe that's why they're taking business away from everybody else. So if I'm trading these particular tickers, I need to be aware of that. So if I'm looking for Dollar General, because a lot of people bought it when they changed the CEO, right? Let's look at maybe the yearly. Where was this? Some people bought it when they changed the CEO. And they thought that it was going to go on the upswing. So now it's at a discount where it's under those prices. Right? Because they're losing customers to Walmart. Dollar Tree is losing customers to Walmart. Right? That's my narrative. You can have a different narrative. Right? They're losing customers to Walmart. Five Below is just not as attractive as it was, let's say 3-4 years ago. And so they're not able to expand. There's one in my area. I never see anybody in the parking lot. Right. They was on an expansionary move. Never see anybody in the parking lot. I think they've hit a demand wall. But this is something that we want to look at. So if we're buying this particular ticker because we believe that, well, it's at a discount. Okay, why is it at a discount? Because something's not at if something's at a discount, you want to know why is it a discount? And does the CEO have the ability to recapture operations? Because what you're seeing, we talked about dead money. If you bought this in 924 or 824, right? You're now underwater what you paid for it. So what's your time horizon to get out of this ticker? If you bought call options on it, your options are already negative. But if you bought equity, you're already underwater on your buy price. You can average down into it, but what's your time horizon to get out of it? And why is it continuing to sell off? Right? So if you bought it in September of this year, you're underwater what you paid for. Why does it keep selling off? Thought it was at a discount. So this is why value investing is difficult for a lot of people, because they think just because something is cheap, that means that it's a good price. Well, a lot of times stuff is cheap for a reason. If Walmart is sucking the whole air out of this space, they're not going to stop. Right? One thing about Walmart and Amazon is their goal is to dominate the whole space. They don't believe in, we'll take 60% of the market. No, they want 99.9% of the market. That's how they play ball. People that's old enough remember Walmart running all of the mom and pop hardware store, especially like the Ace Hardwares, all of them. They just ran them all out of business, right? They ran a lot of grocery stores out of business. I'm from the Southeast. Publix was able to stand the test of time against them. But pretty much every other grocery store in the Southeast, when Walmart started rolling out their super Walmart just ran them all out of business. People may not remember the Winn-Dixies. People may not remember the Piggly Wigglies. They may not remember the Albertsons. All of those in the Southeast when I was a kid. Walmart Superstore got rid of all of them. They no longer exist in the Southeast. If they do, they way in a country town somewhere. I don't know where they at. But I mean, I'm from Orlando, Florida. All of those stores in Orlando, Florida when I was a kid. Super Walmart ran them all out of business. They just took all the air out of the room. So me buying Albertsons, if it was publicly traded at a cheap price, because at a discount, it's at a discount because their revenues are losing. They're discounting their stuff and people still not buying. So when Target tells you we're discounting, but our revenues are lower year to year, even after discounting, that means that people are not in there shopping, right? Because it's the same stuff they had in there. Like Target sells what they sell, right? I got some khakis from Target. They good khakis, but I bought them online. Target sells what they sell. So it's not as if they changed their whole store selection, right? So that's what I want you to understand is that when you're trading stuff that's in the same space, if there's a leader in the space, how is that leader impacting those other companies that we're trading? And is that going to be a positive or a negative for those companies? Right? And Allow people to come in and play the discount. Oh, it's at a discount. Let them come in, because a lot of people want to be value investors, but they really don't know what they're doing. Let those people come in, let them push the stock back up, and then we come back in and short the stock again once they realize that it's not going to be a cakewalk. Because if you're Dollar General and you're Dollar Tree, not only are you dealing with the fact that you're losing your customer, you're dealing with a lot of issues of shrink. So both of those things is hitting them at the same time, right? So I'm enthusiastic when I see people try to go in and save a company with their money, and I know they don't really understand the narrative, because then that means it's just going to come right back down. You just got to be patient. So this is what I'm trying to teach you. These kind of plays, you can play this back and forth for the next 2-3 years. If you just know how to play it, you're not anxious to make money, and you just let the market develop, right? You can really do that. You can play this thing back and forth. Let me try to go here. So we got back up on that 586 level. Okay, big up. You can play this back and forth. And then you can play everything in the whole space. Let me go to Dollar General real quick. So let's go to a 5-year chart. Okay, so here's, I think, about the time when they got the new CEO. I could be wrong, right? But if I'm bearish on this company, I think this was about the time they got the new CEO. It goes back up to 160. Well, what about the environment that they operate in has changed? So we do know that a lot of times if a company has fallen down from 260 all the way down to $99, $100, okay, so they come in with a new management change. They want to change operations, okay? But the issue is that the whole space has changed. How does a new CEO change that? Has anybody ever gone inside any of these stores? They can't even staff the store, right? There's a Dollar General, I think, down the street from me. The store is not even staffed. They can't even get people in there to work. So I see why they got shrink issues. Nobody works in there. So we want to look for these type of things because we understand that most people are headline driven. Most people don't really understand how to analyze something. Most people want to be value investors, but they don't really want to do the work to learn how to do it. All of that creates opportunity for you to make money, right? I would spend less time arguing with people, more time trying to figure out what the opportunities at in the market. I went to bed last night looking to wake up to try to figure out whether or not I was going to be able to play this particular ticker. I don't have time to argue with people over stuff. It's too much money out here to make, right? And that's what I want you to understand. So when we see this type of movement and we believe that they're being negatively impacted, not just by, because the narrative when Biden was in office was that, bad Democratic policy, yada, 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 this, that, and the third, that's creating all the shrink. But also the problem is that people are going to Walmart because they get more value for their dollar. So they're not going to Dollar General anymore. They're not going to Dollar Tree like that. Dollar Tree also has to sell, I think they're trying to offload Family Dollar, and they can't find a buyer for that. So that's an albatross around them, right? That's a yoke they got around their neck. So they can't even offload Family Dollar, right? Because those particular stores are not really attractive right now. So as a trader, what we're doing is I'm looking at everything that's in that space. Is it correlated? We know that grocers really don't have high margins, so they need to make all the money that they make. So when I'm looking at somebody that works retail or grocery, what are their margins and how will their margins impact their ability to discount? And then what happens when they discount and that's still not working, right? So those are some of the things I would really encourage people to start looking at the market from that particular perspective, because we're seeing from these tickers, right? Let's go to Dollar Tree, right? We're seeing from these tickers. These are discount. Looking at these tickers. Let me go to the 5-year, my fault, right? So massive sell-off from 150. So we're under. We're right under like a 5-year. I'm sorry. We're right under a 10-year support. 10-year support's like around $70. We're under that. So we're going now. We're headed towards 2012 prices. And nobody's come in to save this thing. So what we know, and big up to Chastity because she really understood this at a very deep level. Big up to her. What you normally see in a ticker is they put automatic buy orders in at certain prices because they believe it to be cheap. So a lot of times what you have is as a ticker starts to sell off, they got buy orders to buy it at those lower prices because they're long it, so they're looking to get it at a discount. What you're seeing is that nobody's coming in to buy this stuff. So as we get to 150, 149, 150, and it sells off, nobody comes in to save it. Right? Nobody's coming in to save this price. Except some people that want to, they think they value buyers, but nobody's coming in to save the price. What I want you to understand is that this is why I don't really like to argue with people around how much money people make, because I have the income data and I have the retail data. Right? So I have the income data and I know who I know who their customer avatar is, and I have the retail data. So that's why I just refuse to do it. And so that's what I want to really encourage you to do as a trader, like really understand what information is being presented in front of you and then understand how to interpret that information, because that's what, excuse me, that's where the opportunity is at. The opportunity is not like really in going back and forth with people unless you got like a podcast where you get paid to do that. And, but I don't get paid to do that as a person trying to trade the market. So I have the income data. I have the retail data that let me know the condition of a lot of people. Right? So Walmart reports, Target reports, they report in December. Let's see how they report. They all report in the same week, which is weird. So what I think the market is doing is trying to front run what they believe is going to be negative reports from Dollar General, Dollar Tree, and 5. So as a trader, we got to decide, do we want to go along with that narrative? Do we want to have a counter narrative? Do we believe it's going to go back up to the upside? Maybe we believe Dollar General is going to give a favorable report. Maybe we believe there's going to be some growth there. Or do we believe that this is a time to get in on puts and continue to ride it down, right? But we got Dollar Tree pretty much almost at a 10-year. It's under their 10-year support, right? So they've been selling down for an extended period of time. So that's pretty much going to be it. Ain't going to be here too long because, got to get back to it. Anybody got any questions about anything before we bounce out? Right? Anybody got any questions about anything before we leave? Sorry for the slang. Before we exit. Say it like that. Keep it real business. Let me stop the screen real quick so I can look at something. So anybody got any questions about anything we talked about? Okay, so David Lee says, why is Winn-Dixie a brand name staple in Louisiana? Well, I don't know. I couldn't tell you. Maybe people in Louisiana like Winn-Dixie. I couldn't tell you though, bro. But I appreciate the question. Miss Dana says, can Walmart be stopped? Why would you want to stop them? So the real Dana, big up to the real Dana. She got a great channel. Can Walmart be yielded to allow smaller businesses to stay in business? No. So unless, and that definitely won't happen in the Trump administration. Unless you want to go after them for maybe anti-monopoly laws or antitrust laws, saying they run some type of monopoly. No, they can't be stopped. And the Trump administration is not going to be going after anybody for any antitrust violations. That's not going to happen during his administration. They're going to deregulate. So you're going to get more consolidation by large organizations like Walmart, like Amazon. It's going to be full steam ahead in that particular area, right? So I think somebody now said that Google got to sell Chrome. Google just got to probably wait another 6 months till Trump gets in, and then that's going to go away also, right? So you're not going to see with the new administration coming in any changes, right? It's not going to happen because they are going to be anti any type of regulation in that area. So all of the merger deals going to go through. The Capital One Discover deal is going to go through. All the mergers are going to go through. That Albertsons, Kroger deal, that's going to go through. Everything's going to go through. Everything. So the next 4 years is the 4 years that we're going to push everything through because everything's going through, right? They got a green light for all mergers, all acquisitions, all business consolidation. So after 4 years, I anticipate Amazon and Walmart being bigger than they were before the 4 years started. They'll be way bigger with more market share. FedEx may not last the next 4 years because Amazon's coming for them too. Ms. Hill says, crazy call flow coming in for MSTR. I believe it. I believe it. They did I think they just did an offer. I think it was notes to go buy more Bitcoins. I believe that. It's just Ms. Hill, their options are really, MSTR options are really expensive. And so I don't know. I was looking at them maybe 2 weeks ago, but yeah, they probably keep moving up. It's just, Ms. Hill, that's an expensive way to own Bitcoin by buying MSTR because they're evaluated by the price of Bitcoin. It's low-key cheaper, in my opinion, about Bitcoin because I can buy fractionally as opposed to buying MSTR. But for some reason, people want to buy MSTR. To me, that's a very expensive way to buy Bitcoin, right? But it is what it is. That's what people want to buy. You know how that goes. Could Kroger surpass Walmart if their absorption of Albertsons goes through next year? Miss Phoenix 91, that's a great question. Maybe I wouldn't say surpass them. I said maybe they can compete locally. So like where I'm at, Miss Phoenix, Publix does a great job competing locally with Walmart, right? They do a great job. But Walmart has so much coverage all across the country. I don't see anybody being able to compete with that, right? So Kroger may be able to, because you do see certain local grocers that can kind of find their way locally. But I just think Walmart's reach is so broad. And, economies of scale, their supply relationships, their distribution, the way they supply is so thorough. I just think they continue to get bigger because they just can give people that cheap price, especially if they're not looking for any customer service. Right. And in some areas, they do really just have the cheapest price. Some places they really don't. Like some parts of their store, they're really not cheaper. But I think people like the fact that they can go into Walmart and get everything they want in one location. Right. And so they don't have to really worry about having to go to Walmart to get one thing and then having to go somewhere to get something else. Right. So that's the thing. So let's see what Kroger's out here also in the Atlanta metro area, but they're definitely not as big as Walmart and they're not as big as Publix, but they're out here. So is Aldi. In fact, I really think Aldi has more growth potential than Kroger, but that's just me, because there's only there's not a lot of Kroger's out here that I know about, at least not in my area. It's a lot of Aldi's and definitely a lot of Walmarts. There's Walmarts everywhere where I'm at, like they're everywhere. But that's a great question. But the deal goes through though, because with Trump, everything's going through, right? It don't matter what kind of deal it look like. Everything's going through with Trump. They're gonna rubber stamp everything, in my opinion. But that's a great question. So Pascal says Kroger has a store brands that the merger Albertsons actually can compete with Walmart in terms of groceries. Let's see. Let's see what they do. Like I said, they could probably compete locally. I don't think they got the reach because, like where I'm from in Florida, there are no Krogers, but there's definitely Walmarts, right? The Kroger doesn't exist, especially neighborhood marts. Where I'm from is in Orlando. There's a lot of neighborhood marts, not a lot of super Walmarts, but there's neighborhood marts everywhere, like everywhere. So they just got so much coverage, it's just ridiculous. Ms. Hill says, do I think Cat 1 merge has already been priced in? I think it's been priced in for Discover. So potentially, right? Because I remember when Discover, let me go look at it real quick. I remember when it was trading at like 120. I don't know where it's at. And I think it was at like 140 last time I looked. So now it's at 170. Yeah, so it may have been. Yes, I was in here. I remember when it was these prices. So we just seen a massive run up. So it may have been priced in, right? Until they start doing earnings. So, well, let me take that back. If they merge, it's no longer going to exist. So yeah, it's probably been priced in. So maybe looking at Cat 1, but I would want to have a better understanding of what is going to be the benefit from them buying essentially Discover's book of business, which is really what they want. I just think Cat 1 wants subprime customers for whatever reason. So they want Discover's book of business. And so again, this is another deal that the Biden administration was kind of wary on, that it's going to just go through. Right? So that's going to be it. So that's going to be it, man. I ain't going to stay here too long. It's almost 11 o'clock. Appreciate everybody for coming through. Jason Wood, man, appreciate the $5 super chat. Jared, man, appreciate the $10 super chat. Y'all stay safe, man. Let's see how Nvidia reports this evening. Talk to you later.